everyone, thanks for watching us today. We're going to go over some tax and accounting related questions. We get asked quite a lot, mainly to do with corporate tax, inheritance tax, accounting obligations, things you have to do that are mandatory, things that are voluntary. We have Stuart Redbond, who's the expert in this. He's the founder of Redbond & Co, and he's going to be answering all the questions.
Pleasure to be here, guys.
Yeah, very good, very good. I'm Kate Williams. I work at Connect Group in Dubai, setting up companies for people, helping people move over to Dubai or expand within the UAE. So, Stu, do you want to go over a little bit about your experience?
Yes, so obviously I've got an accountancy firm in the UK. It's called Redbond & Co. It's called Robert Lewis Accountants. Obviously, I set that up when I was reasonably young. You know, obviously, I was only 24 years old when I set up Robert Lewis Accountants. Obviously, I'm 39 now, so what's that? It's been going 15 years. I had about 50 clients when I first started out. We've now got, you know, over 100 staff and 7,000 clients in the UK. So it's a reasonably large business. You know, it's obviously expanded over the years. I moved to Dubai. I originally wasn't going to set up Redbond & Co Accountants. I was just going to run my UK businesses from Dubai. But obviously with corporation tax coming out and then the need for an accountant being greater in the UAE, I then made the decision to open my Dubai accountancy practice.
Yeah, makes sense. Makes sense. So we've got a few questions here that people ask us quite regularly that we're just going to go over because then obviously the viewers, So do free zone companies need to pay tax in the UAE?
It's a common misconception, I would say, that people think they don't. But yeah, as a genuine rule, yes, there are some qualifying activities where there are exemptions from paying this new corporate tax. But as at 99 times out of 100 of all the free zone companies that I've come across, there is subject to tax the same way in which a mainland company is.
Yeah, fair. And there's small business relief though, no?
Yeah, there is something called small business relief. It can be referred to as SBR, but yeah, small business relief. And that's a relief that as a regulated auditor, I can claim on a client's behalf when we do the corporate tax return. It just basically means that any business, if it turns over less than 3 million AED, they wouldn't need to pay corporation tax.
Okay, fine. How did they get that 3 million AED?
I've asked my local a question. Obviously, I don't know. It's crazy in some ways that you do an exemption based on turnover when actually corporation tax is something that's calculated on profit, you know? So I'd love to understand who obviously did that calculation, who came up with that figure. I don't know the reason for it, but I suppose it is what it is, and we're going to work to that, I guess.
Can't change it, I guess.
Can't change that, yeah.
All right, fun. Have you got any examples of a problematic situation that you've had with a client and how you've had to sort of fix it, or any fines that they've got? Or
I feel like, to be fair, it's common, you know, obviously people here sort of, I think, I'm going to move to Dubai. I haven't actually got to sort my tax out or do anything, you know. Amount of clients I've come across where we've had to, hang on a minute, have a chat with them and go, all right, so you've turned over how much? Oh, 2 million dirhams. Yeah, only 2 million dirhams. All right, well, you're VAT registered then. Oh, absolutely not. Do you know, it's like, well, do you know the VAT threshold's 375,000 dirhams, so you're well past it. Oh, well, what are we going to do about that? Well, you've got a fine, so...
so you're going to have to pay it.
You should have probably come and seen me about a year ago, but either way, it's an issue, you know, we'd sort it out, you know, we would do a registration and then would very quickly bring their VAT returns up to date and therefore, but then it's going to be very systematic and easy moving forward because we're in the picture then. And we're not going to allow them to miss their next VAT return, you know, we're going to chase them actively until the job comes in. So I have seen many situations where things haven't been idealistic, might be the term, but look, life isn't perfect, you know, but all you have to do is if you've come across a problem, you find a solution. It's as simple as that.
So I was going to say, there must be some companies who've got like 5-10 years of accounts that they just haven't even sorted.
Yeah, well, I think people, obviously, the problem for people like that now is, obviously, you're having to obviously supply the accounts, don't you, to renew the license. Obviously, you're going to know that better than me. I've known plenty of people that we've had to go and do 2 years, 3 years, 4 years in one hit to bring their affairs up to date. People would say to me and go, well, I'm fair, even though I do some crazy deals if that's the case. But really, I shouldn't have to, but I'm just trying to obviously be fair. I understand it must be annoying, but it's like, people go, why can't you just do this year? But obviously the problem with that is if you don't, how can you work
just
out if
guessing.
they're accurate or not if you haven't done the accounts from the year before? Because you don't know, the brought forward figures aren't necessarily quantified and checked, so it leaves no real option but to have to actually bring all the accounts up to date.
Yeah, fair. And they get fines, obviously, if they're like VAT registered or if they don't register for corporate tax on time and things like this.
Both of them 10k.
10k each?
Yeah.
Nice.
And it's the same for late VAT registration, 10k, late corp tax registration, 10k. I'm yet to know what the fine is for a late submission of a corporate tax return.
Yeah, of course, yeah.
I know some other accountants here that haven't even done a corporation tax return yet. We've actually done some, but obviously I've not let them be late, so I don't know what the fine is.
You don't want to let them be late.
But obviously when I say the fine's 10k for a late VAT app, is actually 2, or the first one's 2, then it drops down to 1, but it's about 1 to 2k for every late return as well.
Okay.
And if you pay the liability late, they put a surcharge on it as well.
Yeah, nice. If you would like to book a free consultation to go over the documents you need to prepare and how to prepare them, click the link below to have a call with me or my colleagues. Okay, next question I have here is regarding inheritance tax in the UAE.
There is no inheritance tax, obviously, in the UAE, but obviously we're not Emiratis, we're not local. Obviously, it's the main people that live in this city, let's be clear, are expats, aren't they? That's another very common misconception. People think, I'll move to Dubai or the UAE, I won't pay inheritance tax. We've got a British parcel, we're domiciled to the UK. If I was to die, even if I died here and I'd been in Dubai for 15, 20, 30 years, I would still get hit for inheritance tax in the UK.
Okay.
So obviously, but there is a very good ways to do inheritance tax planning. It's not something I specialise in, but I have some very good people, and there's things you can put in place to mitigate or at least minimise your inheritance tax. That's something that you should be thinking about years before, because once you annoyingly die, you can't then sort it out.
You can't change it, so... Yeah, fair enough. And also, capital gains tax is...
No capital gains tax in the UAE either. No, none.
Okay.
Yeah.
Fantastic. Another one we get quite a lot is corporate tax versus VAT. What is the difference?
Well, they're two completely different taxes. To be clear on that, obviously. So VAT is a tax, value-added tax, is what gets charged, when applicable, obviously, on your turnover. And it's 5%. So say I was a restaurant, say that there was a drink and it was 55 dirhams, that would be inclusive of 5% VAT. It's done on the price, on the turnover, was the term I use. They actually call it taxable supplies in the UAE, but we might call it sales, revenue, turnover, whatever we want to call it. That is calculated on your turnover. But you can obviously also reclaim, you offset that though, you would be able to reclaim the VAT back on their expenses. So say I charged a client 10,000 dirhams plus VAT, 10,500. They would be able, sometimes when you do your fees, the VAT element, they would be able to obviously claim that back against the VAT they owe. So you'd pay the net, the difference of that. So that's on turnover. Corporate tax, however, is 9% here, but it's on your profit, and that's the difference. That's sort of on your sales, if you want to call it, whereas corporate tax is on your profit.
Okay.
And its profits over 375, by the way.
Okay.
Obviously, if they get small business relief, doesn't matter if their profit was 2.8, they're not going to pay it.
Yeah, of course, but still.
That's what it is. It's profits over 375.
Yeah, and over here, obviously, you mentioned earlier, for VAT registration, you can't register immediately, can you? You have to meet the threshold.
Yeah, I know, especially in the UK, I know that very well, so I'll use that as an example. Yeah, you can just set up a company and VAT register it straight away. That isn't the case in the UAE. You've got to meet some requirements, but namely the most common one is that you've turned over a certain amount of money you have to have traded, so there's a mandatory threshold. It's actually 375,000 dirhams, similar to the corp tax one, but you have to have surpassed 187,500. So that creates you your window.
All right.
And windows, annoyingly, can easily be missed. So that's why it's important people keep an eye on it.
Because what I was going to say was, if you, let's say you have a really big deal going through, and let's say your first deal, the money you're going to get is over the mandatory threshold, what do you do?
You're going to have to be careful with that. See, you obviously, what I would do then, this isn't necessary specific advice, but what my brain would tell me to do is I would obviously invoice someone, I don't know, 250,000.
Split it.
What other option do you have? Because otherwise you've got a guaranteed fine.
Exactly.
So obviously you'd look to obviously be not creative, just obviously look at the situation, hang on a minute. I'm going to just raise an invoice.
You can't win in that situation.
You can't win in that situation, exactly. So obviously, you'd have to work a solution, I think is the term. Yep.
Okay, fine. And corp tax registration, obviously it's mandatory for every company now.
Now, obviously, there are a few more windows left. So obviously some people were scaremongering and pushing the life out of the 31st of May. Everyone thought that everyone had the same deadline. They didn't. Some have got, in the month we're in now, there's still an October deadline, there's still a November deadline, there's still a December deadline, but they're for people that have had their companies for a year or earlier in the year. But obviously now, let's say you're setting up a new company for someone today, it's 3 months from the date of incorporation.
Okay, so there's like a 3 month grace period there to get it done. And it doesn't take very long to do, right?
To be fair, obviously many people, it shows you how little time it takes within reason. People charge, most accountants, I don't know anyone that doesn't not charge for doing a corp tax registration. However, at my firm, we do it for free.
Yeah, nice.
We do it as a goodwill gesture for a client when I've put it as part of the, the engagement process. Obviously do our KYC, our AML, do you see what I mean? Obviously get the engagement letter.
It's mandatory, so
we go and do the corp tax. We do the corp tax registration the same day.
Okay, nice.
Get it out of the way.
And for free zone companies now, obviously they've changed the rules. So you mentioned earlier with the renewals, now you have to submit your audited financials, right?
Yeah, correct.
So what if you're still in your first year? Let's say you've set up in like July.
Yep.
Yeah. And then when your renewal comes around, your first year hasn't really been done.
So what obviously, let's say that client on that example had a 31st of July year end. What I've seen in the past is, because you're going to need to renew at the same time your year end technically passing. What I've seen, I don't know which free zone it was, but I feel like it was Maydan. They made the client to sign a document to say, I can confirm that I will submit you my accounts within 3 months, for example, and they allowed the renewal to go through.
Otherwise, it's like to the day.
Otherwise, which I haven't got a problem with. Realistically, it means. But then the world isn't perfect. But when realistically, once someone's year end passes, don't you get what's the grace period on a renewal? Don't you get a month?
30 days grace. Well, it depends on where you are though, because sometimes they like to just give you a fine immediately, but usually 30 days.
30 days, So realistically, that means we've got 30 days to do obviously a fair few sets of accounts, which we'll get it done if we have to, But obviously, if you actually look at it though, you get 9 months from the year end as to when you have to submit the corp tax. And that's the same in England. You get 9 months at Companies House to submit your accounts and to HMRC. They've used 9 months here as well. So that's why it's a bit hard. We won't renew your licence if you haven't done your audit accounts. Bang on it. I haven't actually got to do them technically for 9 months.
Well,
do you see what I mean?
They scare you a little bit as well with the emails that they send out.
I think they're just trying to make sure that
it's all lined up, isn't it?
People have got their ducks in line. But if you was to obviously approach her, look, I know I need them for my renewal. However, they're getting worked on by the accountant now. As soon as I've got them, I will supply them.
Okay. Yeah. Another question we get quite a lot is, can directors take feasible salaries out of the company?
Yes, of course they can. Obviously, as you know, a director salary doesn't have to go through WPS. WPS is the wage protection scheme. If you've got a mainland licence, you have to put your bona fide employees through WPS. It basically reports to the Ministry of Labour that you're actually paying people as per their contracts. Obviously it's to protect people that have probably been not treated fairly in the past. But either way, but going back to the question, yes, as a director, you can take a salary and that would be a bona fide tax deductible expense that would drop your profit. If you look at the legislation on the corp tax, it says it should be market value. So obviously, I think you was going to say about expenses in general, wasn't you? Yeah. So for an expense to be a business expense, it has to be wholly and exclusive for work purposes. That's technically the legal term. The same here is in the UK. But you can put any bona fide business expenses through the company. That would then obviously reduce your profit and obviously reduce your exposure to corp tax. And you can obviously get the VAT back if it's a VATable expense. Okay. So you couldn't put like a Lamborghini through, for example? No, you can't. No, you can't. Damn it. You need to earn the money first. Yeah, this is it. Obviously, one thing that you don't have to do this in England. I think it's crazy, to be honest with you. If you want to be able to claim VAT back on a business expense, you have to get your VAT number, your TRI number, on that expense receipt. That's why when you go, say I went and bought an iPhone in Virgin, a good example, and they was like, do you want a VAT receipt? You go, then you say yes. They'll go, well, what's your TRN? what's your address?
Yeah.
You have to get your details put on. That is same as in England.
Yeah.
They said, let's say I was claiming VAT back and I went into a petrol garage in England.
Yep.
You're not about to get your VAT number put on that.
No,
you
of
know,
course,
yeah. But here in the UAE, you have to get your TRN number put on their invoice. That's a bit of not an issue, but it's problematic.
Yeah,
at
of course
times.
it is. Yeah. Interesting.
Say, for example, if you was to go and purchase, you're a new employee started and you had to go and buy them a computer.
Yep.
Yeah. When you purchase that computer, you would have to say to them in whatever shop that may be,
Yep.
obviously, I need a VAT receipt and here's my TRN. Can you put that on there? And let's say if the maths on that was, it was 5,250 dirhams, 250 of that would be the VAT element. And that's what you would claim back on your quarterly VAT return. Because VAT returns are done quarterly here, like they are in most jurisdictions around the world. It's a quarterly process, a VAT return.
Okay, so the mandatory things you have to do is VAT return quarterly, corp tax registration, obviously VAT registration. One time, obviously, you only have to do that. So VAT registration, corporate tax registration, VAT returns. End of year financials?
Yeah, end of year audited financial statements, which have to be done before you do the corporate tax return, obviously, because you don't know what your profit is until you've collated the accounts, right? Yeah. So what I try and do, the best where applicable, most accountants don't do this, I don't feel. I'm not saying it's because it's lazy, I just think it makes sense. What the term is called when it's coterminous, but what that means is I like to try and have it where the VAT quarters are in line with the year end. So let's say someone's year end, everyone talks about December year ends. I try and make my clients not have December year ends where applicable. But let's say someone had a 31st of December year end. It would just be clean is the term I would use, and it makes sense to me. But yeah, it's called coterminous, where you'd want your VAT return quarters to be March, June, September, December. Do you see what I mean? Because let's say, for example, you was on a February, May, August, November quarterly VAT stagger. It's called a VAT stagger. You'd actually have to wait until you technically did your February VAT return before you could go and do the December account. You're just delaying the position. Do you know what? Obviously, you've been able to actually, especially now when they want them, the free zones want them. It makes even more sense. You're going to be more efficient, aren't you? And get the year-end accounts done quicker if your VAT returns are in line with the year-end.
So it's a bit more planning and like organisation.
Yeah, just plan a little bit at the start. Be organised about it. Approach it in a sensible fashion, and you can get it organised and get your ducks in line, as it were. I think one of the common questions I feel is people think that they can live in England, for example, set up
tax residency,
have a Dubai company, and just be like, oh, I'm not going to pay tax.
No.
Well, you're in the UK for more than 90 days. You absolutely are going to be paying UK tax.
I've had people as well in Spain, when they come over, they're like, but I'll leave the UK, I'll set up a company in Dubai, and then I'll just live in Spain. You're like, no, but that doesn't work if you're a tax resident in Spain.
You're going to get taxed in Spain then. If it was that easy, no one in the world would pay tax.
Tax wouldn't exist
because you would just go and have a company in a tax-free place, but live where you wanted to. Like in England, like it's a bit, I've got a Dubai company. But where? Well, do you want to have a meet face-to-face? Oh, no, I live in England. Okay, so why? Because it might be a Dubai office and they might have other business in the UK. I understand the need for it, but no, it's just I run it out of Dubai, so I didn't want to pay tax, but I live in England, that's where my family and my friends are. All right, well, you're going to be paying tax, mate.
Well, listen, if you've got your company in Dubai and you live in the UK, but you're not pulling a salary out of the company in Dubai, it's just staying in the company account, you're still paying tax on that?
Ignore Dubai or ignore wherever. If you took a salary or you took a dividend from the Dubai company, that would obviously go on their UK self-assessment. You see what I mean? If they didn't, technically they wouldn't pay tax. But there's got to be commerciality around it. Like obviously, because there is rules that technically, if the business decisions or the managerial decisions are being made in the UK, technically they can pursue corporation tax even in the UK. You know, it's just got to be real, and it's just got to be bona fide and above board and legitimate. You know.
Okay. So when do you think the best time for someone to approach a tax consultant and accountant, when do you think that would be in the process?
I think before they decide to set up the company. But I'd say it's probably 50-50. I feel like the people that get recommended to me, because I don't market or advertise. All my clients have always, both my companies, all them thousands in the UK have all come from word of mouth recommendation. So when I get recommended to clients, I'd feel like the ones that come maybe through yourselves, for example, you guys are going to go speak to Stu will jump on a call for you free of charge, run your questions by him, you know. But I speak sometimes, some of the clients I get recommended, they're like, oh, I set up my company. I set up 2 months ago. Did you speak to an accountant, before you set up the company? No.
No, I just set it up.
Just set it up. Like, yeah, because obviously my mate did. Do you know what I mean?
Exactly.
I think, really, in my personal opinion, I think someone should speak to an accountant, before they pull the trigger and pay your invoice, for example, before the process starts. Because I might be able to say to them, look, I actually don't think it's worth it. I'm going to be, you've got to be honest, haven't you?
Yeah.
So obviously, and I've got a professional obligation, it isn't just like, I want you guys to get your set up and I want to get a new client in due course. Sometimes I'd say it's very common that I say, look, I don't think this is an option for you, or I don't think you should do it.
Doesn't make any sense.
Doesn't make sense to it. There's no logic to it. I don't think you're really going to save that much money. And also, when you start working out the cost, like, it's not like it costs, like in England, you can set up a company for like 20 quid pretty much at company's house.
It's so cheap.
You know what I mean? It isn't that cheap here, know, and you've got to pay that cost, haven't you, to renew it every year. And if you hang on a minute, I'm saving £4,000 or £5,000 in tax, but you got
to weigh up the other costs and things like that.
Obviously, you got to weigh up the other costs, especially when it's, I don't know, £2,000-3,000 for a company per year or whatever the maths are, So,
and if you're not living here, like you say, you're still being like taxed on your salaries and things like that.
It just doesn't make sense. You could easily be worse off, or just it adds limited value. What's the point?
Even if you did move here, isn't there a thing? I'm sure I've heard you say this before. Isn't there a thing where if you still have like a house in the UK, or your family's still in the UK, or there's like 5 things if you still have, you'll still be
connecting ties. Yeah. So basically, that just basically means that the more ties you've got, it can mean that you get less. Might be, let's say I had 4 ties and you only had 1. You see what I mean? I'm going to obviously be able to spend less days in the UK than you could.
Okay,
that's basically what it's doing. There's 4 ties called, there's one called the 90-day tie. I won't explain that one so much. But you've got an accommodation tie, like have you got a property that's available to you? There's one called a bit of work tie. So have you got businesses in the UK? There's a family tie. Have you got, dependents under the age of 18, and a wife that live in the UK? So the more ties, the less days, that you're allowed. It can be less than 90 is a very, very good rule.
Yep.
It can end up going up to 120, but it can be as little as 45.
Wow,
So in most cases, I would say it tends to fall into the 90-day category.
Yeah. And do most countries have that? Do you know? Obviously, I know you're a UK specialist, but I'm just saying.
Yeah, what I've learned, obviously, like you said, I only know the UK predominantly, but what I have learned, obviously, over the years is most countries are 183.
Yeah.
Don't hold me to this, but obviously, like, I'm pretty confident, like I said, you can't spend more than 6 months, which is 6 months. Like, in most countries around the world, I don't know, Spain's pretty much that, to my knowledge. Most other countries in Europe, that's it, is 6 months, you know, but the UK is quite stringent on it, obviously, and it's quite strict on the days, it's only 3 months, not 6.
Yeah, I had a client, he was set up his company here and then he went to live in Asia, and then he was just sort of bouncing around like Vietnam, Cambodia, all of this because he was trying not to stay anywhere for too long.
He's become a digital nomad.
Yeah, exactly, digital nomad.
Definitely ain't got kids.
Yeah, exactly. Just one of them in his backpack as he go around. So what advice would you give to people when they're looking for an accountant, but like a trusted accountant who actually knows what they're doing? Like, what tips or would you give to someone like that?
Just use my company, innit?
Other than that, obviously, other than that.
I see a question done. Now, you can go and look at their website, can't you? Look at their LinkedIn. If you hang on a minute, it's blah, 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 at gmail.com. Actually go and check out their website. You can find out what their credentials are. I think the first time you go on a call and say, have you got any clients that do what I do or are trying to achieve what I achieved, obviously give me some examples, obviously, just do a bit of due diligence on the practice or the main director, obviously if someone wanted to say, look, can I see your ACCA or ACA or whatever you're regulated by practicing certificate or your audit license, no one ever has, by the way, I'd be like, of course, no dramas.
But why not?
Why would you not? I would just do a bit of due diligence because some people, there is a difference between being a bookkeeper and being an accountant. It's as simple as that, but there are plenty of probably bookkeepers out there that are obviously going to say that they're accountants, aren't they? So just do a bit of due diligence and just make sure you're getting the right answers because it's important that you get the right answers because there's a lot at stake technically if you get it wrong. You know?
Of course. I had a client before, he set up his company over here. So he was in Thailand, but he was setting it up over here through a tax consultant or accountant. And as the process was going, going on. He had to pay a fine for corporate tax registration. He had to pay a fine for VAT late registration. He had to pay a fine for an anti-money laundering thing. Apparently he got... But just these are physically impossible to get if your company's not set up. It doesn't exist. How can you get a fine if it doesn't exist?
That's just straight fraud, isn't it?
Yeah, exactly.
It's finest.
It's insane.
Well, how much money did he?
So in total, because he's setting up 2, he put $50,000 into each company. Yeah.
Wow.
Yeah, I know.
Where did he pay that money to?
To the
to the corporate service provider.
No, it's a tax consultant. But he's providing these services as well.
That's $100,000.
It's insane.
How many people else he's done that?
But he didn't even have a trade name reservation because I was like, "Have you not got any documents?" He's like, "No, he's still got them all." And I was like, "He's not done them. There's no way." Like. And which definitely means you haven't got a fine if you haven't even got a company name.
It isn't possible to have a fine if the company, the entity doesn't exist in its entirety.
Like all of those things are to do with money. You haven't even got a bank account. You haven't got no money.
Yeah,
wow. Do you know what it's mad.
That's insane.
Yeah. So what would be like an average sort of guide on accountancy fees if you had to have like everything included? Do you know what I mean? All your registrations included, your VAT returns, everything that you would need. Like what would be your fees or a guideline to the fees?
Let's ignore my company for now. I feel like an average VAT registration fee that I've probably noticed of my competitors, because I'm going to do my due diligence, probably 3 to 5k. Mm-hmm. Corp tax, I've seen it, for little as 500, I've seen it up to 2, you know, but I offer both them services free of charge me. So there'd be no charge for that. It's not the easiest questions because someone could have 5 transactions a month, someone could have 1,000, you know, obviously the fees are going to be significantly different, you know. I'd probably say my average fee, you know, per annum was around 15, call it 15,000 dirhams. And that would be to doing all the bookkeeping, doing the VAT returns, submitting the returns on their behalf, then doing the year-end audited financial statements, and the corporate tax return, all in for about that, which I think's very fair, me personally. However, you know, I could probably charge more, you know, but I believe in the greater good and, you know, obviously, and goodwill and, you know, be fair and you can get far in life.
Yeah,
you know?
Of course. So, because I was going to say as well, like, it must be quite hard to estimate, shall we say, how much work you're actually going to have to do. Let's say a company's just set up over here, like brand new, and you're like, right, I'm going to do your accounts for the year. How many transactions? They're like, don't know.
I
have no idea.
Then I would be like, look, let's just call it 50k.
Give me 100k. We'll call it quits.
Exactly. But I would just be like, look, there's no point in us saying what the fee's going to be. Just get signed up with my company anyway. Let's just get the corp tax reg out the way. Let's see how you get on. And once you come to the point, let's say you didn't need to VAT register, for argument's sake, come to do your accounts, it can just be like, send me over the information. We'll just mutually agree a price before I get the work done. If we agree it's going to be 8,000 and I say it's going to be 8 and you say yes, we'll get the work done. If you say, no, I ain't paying that, I've then got a decision to go, well, you're not going to be able to use me then.
Exactly.
Or, okay, well, can we agree on 6 for argument's sake? You know, there's no point in just one party out of a 2-party relationship being happy.
Yeah, exactly.
And the other one not, because there's not going to be a longevity to the relationship, is there? So I'm realising that would just have to be a conversation, wouldn't it? You know, just and get something that we're mutually both happy with.
Yeah, of course. You don't want to be someone's accountant for 1 year. You want to be it forever.
You might as well do it. You want to be it for as long as that company exists, don't you?
Of course.
And that's not going to happen if you're charging a fee.
If you're starting an argument on the first time.
On the first thing, is it? You know, so you've got to look at the bigger picture sometimes, you know?
Yeah. Is there anything coming up, like tax related over the next year, like not just necessarily in the UAE, but anywhere in the world that you think people should be like taking into consideration or you think people should be discussing? Obviously,
you know, in England, obviously, I know we keep referring to the UK, obviously, and some of the guys watching this won't be from, but it's
where we're from.
We're both British, you know, so, but obviously, and a lot of people are leaving the UK. I mean, I feel like half of the UK is already living in Dubai, you know, but there's obviously Labour are in now. There's a budget coming up at the end of the month, and I think there's talk that it's going to be one of the most ones that have like rocked the UK, you know, more than any other one in the past, you know. So I'm guessing if they decide to, I mean, I've got companies in the UK, and I still pay corporate tax in the UK. I've got lots of staff, so I'm paying PAYE, you know, obviously. If they decide to put taxes up even more in the UK, let's say they put corp tax already gone from 20 to 25, imagine they end up putting it to 30 and put personal tax up even more, I'm sure that more and more people will be looking to leave, you know, because if it becomes cost of living crisis is not going to get better. It's going to get worse if they do that, isn't it, realistically, So be mindful of the budget in the UK, I would suggest, if we're being specific to
When
the
did you
UK.
say that is?
I think it's the 31st of October.
Okay.
But yeah, obviously I don't know the exact date.
Halloween, very scary.
So they'd definitely be concerned.
Moral of the story is talk to an accountant before you do anything, because you don't know if it's going to be good, bad. You don't know where you're going.
Exactly.
So just to get your ducks in row, yeah?
Yeah, I agree completely.
Cool. Thank you so much, Stu.
No,
for coming
pleasure,
on
mate.
today.
Pleasure, anytime.
Yeah, very good, very
Thank you.
good.
Thanks for having me, guys.
Cool. Thank you.